Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly podcast. Today's date is the 15th of September. Let's dive into the week's top market news. European optimism amidst economic nuances. European stock markets demonstrated a robust performance this past week, as the Pan-European Stocks Europe 600 index concluded 1.03% higher. This positive momentum was largely driven by the anticipation of a potential interest rate reduction by the U.S. Federal Reserve. Reflecting this bullish sentiment, major indexes across the continent posted significant gains. Italy's FTSE MIB advanced 2.30%, France's CAC 40 index climbed 1.96%, and Germany's DAX added 0.43%. The UK's FTSE 100 index also experienced an increase of 0.82%. Meanwhile, the European Central Bank ECB, as widely expected, held its key deposit rate steady at 2%. ECB President Christine Lagarde reiterated the Eurozone's stable position, with inflation maintaining a 2% level. The central bank did slightly revise its forecasts for inflation and economic growth for the current year, now projecting 2.1% inflation in 2025 and 1.7% in 2026, and an economic expansion of 1.2% this year, an increase from its prior estimate of 0.9%. Despite these upward revisions, financial markets predominantly interpreted this as an indication that the current rate-cutting cycle might be nearing its conclusion. However, the ECB did moderately trim its growth estimate for 2026 to 1% from 1.1%, factoring in an expected slowdown in global demand. Contrary to prevailing market sentiment, we suggest that financial markets might be overly optimistic about the cessation of monetary policy easing. He identifies a potential for the ECB to implement an additional rate cut by March 2026. This move could be influenced by various factors, including the eventual ramifications of U.S. trade tariffs, persistent political uncertainty in France, and the appreciating value of the euro. Economic indicators from Germany presented a complex picture. German exports unexpectedly saw a sequential decline of 0.6% in July, primarily attributed to diminished U.S. demand, itself a consequence of trade tariffs. Exports to the U.S., Germany's foremost trading partner, recorded a substantial 7.9% slump compared to June. In contrast, exports to European Union member countries increased by 2.5% month-over-month. On a brighter note, industrial output in July rose by 1.3% sequentially, slightly surpassing consensus forecasts. Nevertheless, factory orders experienced an unexpected drop, falling by a seasonally and calendar-adjusted 2.9% from June. The UK economy exhibited a stall in July, with its gross domestic product GDP remaining unchanged following a 0.4% sequential growth in June. While marginal expansions were observed in the services and construction sectors, these gains were negated by widespread weakness in manufacturing, which contracted by a greater than expected 1.3% month-over-month. Consequently, the rolling quarterly growth rate decelerated to 0.2% from the preceding 0.3%. In the realm of French politics, President Emmanuel Macron appointed Sébastien Lecornu, the centrist defense minister, as the new prime minister. This appointment follows the collapse of the previous government under François Bayrou, who lost a confidence vote concerning a debt reduction budget. Now our insight into alternative markets. Europe's defense renaissance, M&A boom and regulatory shifts. Europe is rapidly bolstering its military-industrial base amidst escalating global uncertainties, leading to an unprecedented surge in defense mergers and acquisitions. International investors are strategically adapting to capitalize on these opportunities while navigating transformative regulatory changes. The defense industry has become a resilient pillar in European deal-making, defying broader economic challenges. The conflict in Ukraine, heightened geopolitical risks, and a desire for reduced reliance on U.S. security guarantees have exposed vulnerabilities in the EU's defense infrastructure, spurring urgent political action. Member states are increasing budgets, resulting in a 15% expansion of order books for leading European contractors in 2024, reaching a combined historic backlog of €291 billion. This demand fuels robust cash flows, enabling strategic expansions. In the first half of 2025, European defense M&A transactions reached $2.3 billion, a 35% increase from the previous year, surpassing 2024's full-year total. Globally, aerospace and defense deals totaled $21.7 billion, more than doubling H1 2024 figures and reaching their highest levels since H1 2021. This reflects a broader trend of European defense spending surging 17% to $693 billion in 2024, exceeding Cold War-era highs. Geopolitical dynamics are the primary catalyst for this M&A boom, with private equity interest intensifying as governments channel private capital into the sector. Global pay defense deals more than doubled to $13.8 billion in 2024, with M&A volume rising 30% year over year. Valuation multiples in Europe underscore market optimism, with the EV/EBITDA ratio for M&A climbing from 13.6x in 2024 to 20.7x in H1 2025. Historically, pay funds were divided on defense investments, but limited partners are now pushing for greater exposure to this high-growth area. Major players are pursuing consolidation with shorter investment horizons to leverage current tailwinds, prioritizing advanced manufacturing and technology. Notable 2024 deals included Rheinmetall's acquisition of Lock Performance Products and Lohr Holdings' purchase of LMB. Europe is also focusing on uncrewed systems, with Leonardo securing EDF contracts and Poland ordering numerous items. Battlefield evolutions are driving a pivot towards tech startups specializing in drones, AI, and cyber capabilities. Europe's technological lag necessitates international partnerships. Since October 2024, 6 European drone and counter-drone startups have been acquired. Venture capital funding for European defense tech hit $5.2 billion in 2024, a 24% increase, with high-profile investments like Spotify founder Daniel X Prima Materia leading a €600 million round in drone maker Helsing. Non-EU investors must structure deals to tap into the torrent of public funds. The ReArm Europe Plan, now Readiness 2030, aims to incentivize investments with a €150 billion EU loan facility under the Security Action for Europe SAFE instrument, enabling up to €650 billion in additional spending. Germany has suspended its debt brake to target 3.5% of GDP on defense by 2029. SAFE funds target a broad range of European and partner countries, requiring at least two-country involvement for joint procurement and specific EU origin cost percentages. Foreign investors must prioritize EU-domiciled structures and governance to comply with FDI screening and SAFE intent. The European Commission's Defence Readiness Omnibus Package, finalized in June 2025, further expedites procurement and scales capabilities by raising EU procurement thresholds, accelerating joint deals, fast-tracking permits, easing cross-border transfers, and adopting flexible merger reviews. The package also addresses defense investments under the EU Sustainable Finance Framework, with forthcoming benchmarks expected to clarify sustainable classifications. These reforms promise accelerated profitability by reducing bureaucracy and enhancing legal certainty. As NATO's 2025 Hague Summit aims for a 5% GDP target by 2035, Europe's defense sector, backed by significant national programs, is poised for sustained growth. Investors must strategically adapt to these evolving frameworks to unlock the sector's transformative potential.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.